Costing methods are essential frameworks used to assign and ascertain costs to products, services, operations, or processes. The choice of method depends on the nature of the business, type of production, volume of output, and specific managerial needs. This module delves into the major costing methods and techniques, providing you with the theoretical foundations and practical applications to support decision making, efficiency improvement, and accurate cost control. This module explores job costing, batch costing, process costing, contract costing, operation costing, and service costing, as well as techniques like marginal costing, absorption costing, activity-based costing, ABC, and uniform costing. Each method or technique serves a strategic function and can determine profitability, pricing, efficiency, or internal performance. By the end of this module, you will be able to understand and describe various costing methods used in organizations. Apply the appropriate costing method for a given production or service environment. Analyze the principles and computations involved in marginal and absorption costing. Differentiate between traditional and modern costing techniques. Use activity-based costing to allocate overheads more accurately. Explain the importance of choosing the right costing system to suit business needs. Job costing, used when products or services are customized or produced per customer order. Costs are tracked per individual job or order. Examples: printing press, carpentry workshop, repair shops. Each job has a job cost sheet detailing direct materials, direct labor, and overhead. Suited for low volume, high variance environments. Batch costing, used when goods are produced in batches rather than individually or continuously. Cost is ascertained per batch, then divided by units to get cost per unit. Common in garment, shoe, and pharmaceutical industries. Efficient for standardized products made in medium-sized lots. Process costing, used for continuous production of identical, standardized products. Costs are accumulated for each process or department. Used in industries like cement, oil refining, paint, paper, and sugar. Incorporates normal and abnormal losses, equivalent units, and inter-process profits. Contract costing, applied to large-scale long-term construction projects. Examples: building bridges, highways, skyscrapers. Costs are accumulated per contract. Involves work in progress, certified work, retention money, and escalation clauses. Operation costing, used where a product passes through a series of operations within a single process. More detailed than process costing. Common in mass production industries like auto manufacturing, bottling, or electronics. Service costing, operating costing, used in service industries where output is intangible. Examples: transport, hospitals, education, hospitality. Costs are expressed per unit of service, e.g., cost per bed per day, cost per kilometer. Costing techniques. Costing techniques are used to analyze and report costs for decision-making, pricing, control, and profitability assessment. A. Marginal costing. Focuses on variable costs only. Fixed costs treated as period costs, charged in full to profit and loss. Useful for break-even analysis, decision-making, and short-term planning. Concept of contribution equals sales minus variable costs is central. Decisions: make or buy, pricing for special orders, profit planning. B. Absorption costing. Allocates both fixed and variable costs to units of output. Required under generally accepted accounting principles, GAAP. Provides full cost per unit, but can distort decision-making in the short term. Cost accounting activity-based costing. Assigns overheads based on activities that drive costs, rather than volume. Improves cost accuracy by focusing on cost drivers, e.g., number of machine setups, quality inspections. Common in complex and automated environments with high overhead. Benefits: better product costing, identification of wasteful activities, D. Uniform costing. When several firms use the same costing principles, Enables benchmarking, industry comparison, and collaboration. Common in trade associations, industries with price control, or public procurement. Comparative summary of techniques. Columns. Technique, focus, use case, and includes fixed costs. 1. Marginal costing, variable costs only, short-term decision making, and numbers second. Absorption costing, full cost per unit, external reporting, inventory, and yes. 3. Activity-based costing, activity-based overheads, complex overhead environments, and yes. 4th, uniform costing, standardization, industry reporting, comparison, and yes. Practical tasks for you. Prepare a job cost sheet for a hypothetical furniture job. Compare marginal versus absorption costing for a given production scenario. Identify suitable cost drivers for an ABC system in a bakery. Compute unit cost using process costing with normal loss. Develop a costing report for a transport service using service costing.